Hey, it's Wednesday, August 17th, EIA Day, and I wish I would have been trading the 6J instead of fighting crude earlier, but I managed. Um, these are just so nice and smooth to trade. I mean, you find a direction, match a higher time frame trend, which right now for the 6J is all green, as you can see. And so the trade is to come inside that and take the longs. So just select the longs, and these are your entries. And I woulda, coulda, shoulda, but I was doing crude oil. Look how nice it came up to yesterday point of control and bounced. Just textbook perfect. So using this as my template, this is what I'm looking for. Nice vertical movement. I mean, this is just saying go north, go north. So could probably trade this up to the VWAP. Hit yesterday VWAP, so I might execute a late signal, risking, and this is right at the middle of the volume profile, so this looks like an area it might come back to if it does fail and come in here. So that's really what you have to do, is measure your risk to the entry of the trade and see if you have enough room at a minimum or a target to trade to. So there is a target. What I don't like about this trade is there's a big area of support right underneath the first stop. So if it did come back here, it was probably go ahead and fill in this extra area. So this trade really is then you would need to risk this profit or this one. So stop loss, I mean. This is just too much risk for that trade. And we'll just see what this looks like on a green candle and think about going for this profit target. I might do that going into the close. So I don't know. I'll think about it. But these are great, great signals on the yen. So I'll have to watch that contract tomorrow. Thank you so much. Oh, the crude. Sorry, one moment. Let me pull this up. The report was mixed. Had inventory reduction, but we also had some gasoline stock. So a lot of up and downs, as you can see. Just chopped you to death, up and down. So very hard to get a handle on this. This would have been better to trade. Just wait for price to go in the area that you want to go in and wait for it to change the direction that way, and that way you have more of a targeted directional opportunity. And see how many times they fail. This was a huge range box. $17 to $53 to $54. almost 40 cents, 45-cent range. So up and down, up and down, up and down. Makes it very difficult to directional trade. But again, those were the trades that I should have been at least trying for. And this one did not work out. But this would have, and that would have. This one, no. No, no, no. So this one, yes. You would have gotten in down here and just held it. You would have been in the whole time. But that's a very large range, and I was playing it a little bit tighter than that, so I got bounced around a little bit. And also got faked out at a gap run that did not fail at the open. So, but it all worked out at the end, and that's all that matters, right? And a learning experience from how the price action behaved. And you can't trade this. This is just not tradable. What we want to trade is this. The charts would populate. There it is. That looks much better. So know what we're looking at and then go in for those trades. Much better opportunity. And here this is falling back inside the area. So I'll wait for a new setup opportunity, and hope you trade the FOMC minutes well, or stay out of the market like I'll probably do, and try to trade those tomorrow. Thank you so much.